Stochastic RSI+Triple EMA ATR trading strategy backtested with Bitcoin hourly chart. Trader Pro's video claimed that Stochastic RSI+Triple EMA and ATR stop loss and take profit values used as a trading strategy performed very well. I wanted to test this assertion and see how it played out with Bitcoin hourly data. In this video, I will first describe this strategy, then backtest it with almost 10 years of Bitcoin historical price data. I'd like to remind that this is not trading or investment advice. Backtest results are often unreliable. The strategy. For long positions, buy when price is greater than EMA 8, which is greater than EMA 14, which is greater than EMA 50, and Stochastic RSI crosses over Stochastic RSI signal, and both Stochastic RSI and Stochastic RSI signal are over 50. Sell when stop loss equals 3 times the average true range ATR and profit target equals 2 times ATR. For short positions, sell when price is less than EMA 8, which is less than EMA 14, which is less than EMA 50, and Stochastic RSI signal crosses over Stochastic RSI, and both Stochastic RSI and Stochastic RSI signal are less than 50. Close the position when stop loss is equal to 3 times ATR and profit target is less than 2 times ATR. Stop loss 3 times ATR, take profit 2 times ATR. During almost 10 years, there were over 2,000 trades. The win rate of the strategy can be considered good, it's 44%. We were trading only about 70% of the time, which is also good. The average trade duration was about 1 day. But look at the return. It is minus 65%. We lost money. This is very bad, especially when we consider huge return on buy on hold. This chart shows the trades and prices for the 10-year period. As you can see, we had a bad maximum drawdown of minus 97.5%, which lasted almost 3,000 days. So I wanted to see if we can find a better stop loss and take profit values. When I optimized the strategy, I found that stop loss equals 7 times ATR and take profit equals 10 times ATR were the optimum values. Stop loss 7 ATR, take profit 10 ATR. Again, during almost 10 years period, this time there were only 483 trades. The win rate is identical to the previous one, 44%. Not bad. Note that the average trade duration rose to 6 days. But the return is now over 17,000%. This is still more than an order of magnitude less than buy on hold return. The chart shows that the maximum drawdown was minus 90%, which lasted over 725 days. Better than the original strategy, but I don't think this is still good enough. So I wanted to further optimize the strategy, this time using fixed percentages stop loss and take profit. The heat map shows the results of the optimization. As you can see, 3% stop loss and 18% take profit is yellow, so that combination is the optimal result. Stop loss 3%, take profit 18%. During almost 10 years, this time there were about 700 trades. The win rate looks awful, a mere 22%. Does this mean the strategy is bad? Not necessarily. Let's look at the return. Almost half of buy and hold return. This is the best that we have obtained so far. This fixed percentage optimization is 20 times better than the optimized ATR values for stop loss and take profit. The number of trades we lost is more than that we won, but when we won big. The maximum drawdown is only minus 56% this time, and it lasted about 700 days. But does this better optimized strategy work for other time frames? Let's test this with 2 periods. Stop loss 3%, take profit 18% last year. The exposure time is about 85%. We made 87 trades and the win rate is identical, 22%. We made a profit of 106%, less than half of buy and hold. The average trade duration was over 3 days. The maximum drawdown was minus 41%. And it lasted 79 days. Stop loss 3%, take profit 18% 2 years ago. Now let's look at the time period between June 2018 and June 2019. This time the exposure time is about 90%. The number of trades is 81, the win rate is very bad, 16%. We lost money, the return is minus 8% compared to 50% of buy and hold return. The average trade duration was over 4 days. The maximum drawdown was minus 55% and lasted 315 days. Conclusion. It is very bold to say that a strategy is proven to be profitable for all time periods. Because we almost always overfit when we backtest, I think we need to be very careful with claims of proven strategies.